Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we got a breakout on the Bitcoin chart. We got lots to go through here. Bitcoin pumped from 114,000 to over $118,000. At the time of recording, it is trading at $118,715. Now, if you caught my past few podcasts and even checked out my newsletter that I published this past weekend, you knew this was coming because I said something bullish was setting up on the chart because we saw Bitcoin on the daily chart, its RSI hit the oversold zone. And in addition, the fear and greed sentiment hit fear. And when that happens in a bull market, we're going to see a reversal, right? And we are still in the bull market. I've been sharing with you guys multiple factors and signals, no emotions, just facts. And you can't just look at one or two elements. You got to look at the whole landscape. And that's what I've been sharing with you guys, right? To help you get the full lay of the land so that we can navigate this market, not from an emotional standpoint, but from an educated standpoint. So once again, just like in the tariff crash, I was beating the drum. We're still in the bull market based on the data, but people get caught up too much in the price and the sentiment starts to drop to fear. But look, this is where the educated investors make money, and those who panic sell, well, you know what happens to them. So, guys, Bitcoin is on the move here. Very nice breakout. As always, we're not going to see a straight line up. You will have retests. Bitcoin could roll over tomorrow and retest some of the support levels, but we have a breakout. The RSI is on its way up, and this could be the start of the next move because we are in October. So usually you have Q4 being a great season for markets, not just crypto, but stocks and much more. And of course, we're coming away from a downtrend and fear, like I said, and the oversold zone. So everything's moving according to plan. Now, one of the elements I've been telling you guys about is that global liquidity continues to be one of the top signals that is showing us the path forward because all markets are following global liquidity. And we've been seeing a lot of movement in the stock market, in gold, and much more. We're going to talk a bit more about gold later. Right now, if you look at the total crypto market cap, it's back over 4 trillion once again, and altcoins are waking up. Ethereum is up over $4,300, XRP at $2.96, BNB that has been showing a lot of strength over the past few weeks. It is over $1,000, so it's doing pretty well. It's been almost like one of the leading altcoins in this period, similar to what XRP and Solana have done in this bull market. Solana is over $221. So we're seeing some green across the board here. This is a very good sign. Now, if we look at Bitcoin on the weekly chart, which a lot of people have been saying, hey, bearish divergence and this and that, and the bears are in control. It's what I've been saying since late August. I said the bears are in control. We just have to let the market cycles play out here. We're going to go to the oversold zone, and then we're going to see a reversal. And in fact, you were seeing the MACD is showing the bears are losing control. The red candles are starting to get lighter. So the same thing applies to green. When they're darker, it's when they're in full control. When they start getting lighter, they're losing control. So the bears are losing the momentum here. But one of the things I was sharing recently is if you look at the monthly chart, the higher time frame, right? This is where you can't just look at one time frame and say, that's it, top is in, it's over. No, you got to look at all of it, right? You got to look at all the different perspectives. The monthly charts, the bulls are in full control, and the monthly RSI is not overheated like we've seen in the previous bull market tops. So that's a big signal there. Here's what analyst Crypto Wizard said. Bulls take charge. He shared a chart, the Bitcoin chart. He says buyers stepped in once again. Bitcoin is back in its 84-day range. Bitcoin bounced from the previous liquidity zone. The bullish reversal has delivered a higher low and formed a double bottom. Provided that it holds, 120K is up next. So guys, one of the things, I think I mentioned it to you guys, but once we cross 118,000, that's a very positive sign, and we did. So bears are in trouble now, and Bitcoin's going to continue to move up. I think the next major target beyond 120K is that 132 range. That's something we were talking about since August, right, guys? But the market takes its time to play out, and you have your downtrends and much more. So everything is still on track here. Now, I love what Michael Pizzino, who has a YouTube channel, so I highly recommend you guys subscribe to him. He does a lot of Elliott wave analysis. one of the things I've been telling you guys about is you have to look at Fibonacci and Elliott wave. Again, you can't just look at Fibonacci, right? You have to look at multiple data points. If people are just showing you one or two, they're doing you a disservice. They're not showing you the full landscape. You have to address all the different points. And yes, there's a bear scenario, and yes, there's a bull scenario. But I've been on the record saying I believe the bull scenario has the higher probability of playing out because it has more factors outweighing the bear. So his Elliott wave analysis for the total crypto market shows we are in the macro fifth wave and we still got room to run here. And that could take us to the end of 2026. So no one can call the exact top, but we want to look for validation that the run is still continuing, and we're seeing that. So we could see a blow off top in late Q4, or this bleeds into Q1 2026. So remember, I'm saying this, right? Because again, I don't have a crystal ball, but based on the data, not my gut feeling, not guessing, but based on the data, we are still in an uptrend. There's still more to go here. How long that takes to play out is the big question, right? Which, again, we don't have a time machine, we don't have a crystal ball. So this could blow off top in Q4, late Q4, or it bleed into 2026 Q1. So Michael says, massive move in the last 24 hours, and there's a lot to be bullish about. The macro cycle remains on track, with the next hurdle being a break back into the all-time highs. But never forget that the market will do just enough to fool most people most of the time. So, a lot of people are calling the top, getting bearish because they got caught up in the emotions. But this is where, once again, leave your emotions at the door, folks. Now, another signal we've been looking at is tether dominance, the stablecoin dominance, right? And right now we're seeing, some bearish flags forming, and tether dominance is starting to break down again. I said once this thing breaks the 4%, and then even 3.7%, it's game on, man. It's going to be bananas. A lot of liquidity is going to start flowing into the crypto market. So we're seeing the downtrend once again. So another point here, in addition, Bitcoin dominance. Now, Bitcoin dominance is rising because we are seeing Bitcoin take charge again. What have I told you guys about over the years? Nonstop, the liquidity flows from Bitcoin down to the altcoins. Bitcoin's going to steal the show. Bitcoin dominance is going to rise. Then Bitcoin will become oversold. Then the rotation to the altcoins, guys, time and time again. So I hope you're following me and listening to what I'm saying about these things. This is the data. These are the facts. These are the patterns we've seen, and it's playing out again. Now, gold has been hitting new all-time highs. And I've been telling you guys for the past 2 years, we are in a macro bull market for all assets, and it's all following global liquidity. So precious metals, gold, right? We're seeing silver and other metals popping off as well. Stocks, of course, the S&P 500, NASDAQ has all been hitting new highs. Crypto, of course, and real estate. And once you grasp that concept, folks, it makes investing a lot easier. I'm not saying anything's guaranteed, but once you understand these principles and foundational knowledge of these things, it makes it a lot easier to navigate these volatile times. So gold is going crazy, and what we've seen is a rotation of liquidity. So here, the folks at Merlin Trader, and I recommend you subscribe to their channel as well. They said when gold finishes, Bitcoin takes over. In 2017, gold peaked, then Bitcoin exploded. 2020, gold peaked, Bitcoin doubled. 2025, gold peaked, super cycle lows. So again, macro rotation of liquidity, right? We've seen each asset class have its turn. Obviously, it's much easier to track gold, stocks, and crypto versus real estate. But what we've seen over the past 2 years is that real estate prices are exploding, and people are like, wait a minute, what's going on? The market is being stagnant, right? Mortgage rates are high. It's because it's all getting priced with the higher global liquidity. And again, that's such a foundational knowledge item that you need to have, folks, to keep that in mind. So gold is another leading indicator. Multiple times in this bull market cycle, we've seen gold pump and then cool down, stocks and crypto start moving. Same thing is happening here. So it's pretty incredible. Now, another metric I shared today, and this might be a little bit complicated, is the Bitcoin MVRV. It took me a while to understand it, but it's data from Sentiment. And right now, or I should say, over the since late August, Bitcoin has been below market value and even at neutral, because when it gets above market value, there's usually, that's when we see a pump, and then things are going to go the opposite direction, just like the RSI, right? It's all cyclical. And the MVRV is showing we got room to run here. We can get very overheated and go much higher. So just be prepared for this rally. Let's see where it takes us. And again, it won't go up in a straight line. There will be retests. So just be prepared for that. And then one of my metrics I've been sharing with you guys for a long time, the Bitcoin whales are buying, they're accumulating. Data from sentiment shows wallets with 10 or more Bitcoin continue to rise. Again, guys, if other YouTubers or whoever are not showing you these data points, ask them why. Hey, why are you not looking at this? Why are you only looking at one or two things? Why are you not looking at 10 different things, right? The other thing we talked about is the top never comes in when there's fear. There's never been a bull market top with fear. It's always euphoria. It's going to keep going higher. You're an idiot for selling, right? So if you're selling into fear, you're doing it wrong. That is completely wrong. So, no, now don't get me wrong. If you have an emergency, you need to liquidate your assets, then by all means. But we're talking about just a normal scenario. If you're selling into fear, that's wrong. You want to sell into greed and euphoria into the pump. So the Bitcoin whales are accumulating. So the people who are bearish, what do you have to say about this, right? Again, guys, I'm just sharing the data points and I'm posing the questions. In addition, top signals that we've seen in the past, like the Pi cycle top indicator, nowhere close to flashing. Those of you who are bearish, how do you address this? Right? So, guys, I hope you appreciate the facts, the data, and the signals, and multiple views here, not one or two, multiple. Right. And there's even more, but we don't have time to go through everything. Like I said, in my recent newsletter, I put a lot of this information in there. And here we're seeing the result of these things. And I'm expecting a great Q4. Nothing's guaranteed, right? Black swan events could happen. I know some of you are saying, but Tony, government shutdown, government shutdown. Um, some folks I was watching today, like Benjamin Cohen and some others, did an analysis on this. Guess what? After every government shutdown, the markets pump. Why? Because what do they have to do, in order to avoid the government shutdown? They have to get the spending raised and then signed into law. What does that mean? More liquidity, more currency devaluation, and assets are correlated to global liquidity. I hope all the puzzle pieces are coming together here for you. So government shutdown is not something to worry about. Clearly, look at Bitcoin's pumping in the face of government shutdown. Why? Markets are forward looking and markets see that, hey, they can shut it down for 8, 10 days, whatever, but eventually they're going to have to sign the check to get it going. And all that liquidity makes its way through markets and much more. They're going to have to print or inject liquidity from the treasury and much more, guys. It's the same thing over and over. Didn't this happen, last year or the year before? It's the same crap over and over. Don't get too caught up with these narratives. Understand the data because the data shows you, and obviously we got to look at multiple data points, like I'm saying, but stick to that, right? The news and the mainstream media is going to tell you, "Oh my God, it's over," blah blah blah. Same dog and pony show, political theater we've seen time and time again. But if you're looking at the data, you look at that and you say, "Okay, whatever." I know they're going to have to sign the check because if they don't, folks, and I've said it many times, they can't let the value of the markets go down too low. The collateral can drop because people will be out in the street. It's going to be end of the economy, end of the civilization. So they have to keep the show going. That's why they keep printing because they know what would happen if people can't put food on their table. And, that's kind of the last resort and they see like their assets going down and they're losing. Anyway, I don't think I need to explain that further. What will happen. So they have to keep doing this. This is the fiat system, right? So, folks, I hope you understand what is at play here. I hope you appreciate the facts and the different points of views and not just one chart or one signal. No, you got to look at the whole thing. You got to look at the daily, you got to look at the weekly, you got to look at the monthly, you got to look at what the macros are doing, you got to look at the on-chain data, you got to look at the sentiment, the app rankings and the app store, right? Have we seen levels like we've seen in the past? No. I'm specifically talking about the Coinbase app. When we are peak euphoria, that thing is in number 10, number one in the rankings and much more. So folks, bull market's not over. We still got more to go. Will it be a straight line up? Of course not. Expect volatility, expect retest, but this is a very solid breakout, and 118K was a key price point to break through there. Now, folks, a great place you can buy, sell, and stake crypto assets is on Uphold. Uphold is one of the top exchanges out there. I've been using them since 2018. They offer 300 plus cryptocurrencies, and they offer staking on 20 plus crypto assets. And folks, I've never had any issues using them. They've always been reliable. And best of all, they are fully reserved. They don't commingle or lend out your crypto assets. And you can review their transparency report on their website. So that's great transparency. I love that. So once again, you can check that out. They have a great rewards program called Uphold Rewards, where you can earn up to 5.25% on stablecoins. This is done correctly. There's no shady business happening here. I've interviewed the CEO and many folks, and we break down how they're getting the yield and much more. Part of this rewards program also gives you 24-hour early access to new tokens they list. And folks, these stable coins that they offer the yield on are Ripple's RLUSD. You earn up to 5% there, and USBC, you earn up to 5.25% there. And to participate, you simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. Very simple. If you have a DCA plan, this works out beautifully. So they have a bunch of other offers and programs and much more you can check out. So if you'd like to learn more, check out the link in the description. Okay, folks, let's jump into some news. Congressman Begek pushes plan for Bitcoin reserve, cites the need to diversify U.S. balance sheet. So we are seeing talks about the Bitcoin reserve, the United States being able to buy Bitcoin. They've already established the reserve where they've taken the Bitcoin they've confiscated over the years through seizures and, from bad actors and much more. And they've established the reserve with that. But the missing component is being able to buy. Here's a quote from Nick Begek. We got a heavy emphasis on gold. I think we should have an additional strong emphasis on Bitcoin. Begek, alongside Senator Cynthia Lummis, introduced the Boosting Innovation, Technology, and Competitiveness Through Optimized Investment Nationwide Act, or Bitcoin Act, this past year. So I recently interviewed the CEO of CleanSpark, the Bitcoin mining firm. I published that interview a couple days ago, and he was recently in DC with Michael Saylor and other Bitcoin miners to talk about how the United States could potentially buy Bitcoin. There's different things being floated around, like selling some of the gold they have to buy Bitcoin. Some people have talked about using tariff revenue, because we've seen the Trump administration say they don't want to use taxpayer dollars. And I would be very upset if they do that, by the way. I don't think they should use our taxpayer dollars to do that. But if they can find a revenue neutral way, that would be key. So tariff revenue or selling some gold, I don't know, but let's see. But the conversation, the dialogue is starting again. And this could be one of the narratives that is used to send Bitcoin to higher prices and the bull market to heat up, right? It will be a huge narrative pushed by the mainstream media. All right, moving ahead. Trump nominates acting FDIC chair to officially head the agency. This is bullish. Travis Hill has served as acting FDIC chair since Donald Trump took office on January 20th, later issuing guidance on crypto-related activities and criticizing allegations of debanking. So essentially, he's pro-crypto, he gets it, and he's going to be, looks like, nominated to be the permanent chair, so to speak, here. And the FDIC is a key component, right, with the ability for crypto to be used by banks and custody by banks, having the insurance and much more. So this is very good. So according to congressional records, Trump's nomination of Hill as FDIC chair was sent to the Senate Banking Committee on Tuesday. So let's keep an eye on this. This could be confirmed pretty soon. All right, moving ahead. Fortune Crypto is reporting that Susquehanna Crypto CEO departs to lead $671 million Avalanche treasury company. So the native token of Avalanche is AVAX, of course. I do hold AVAX in my portfolio. This shows how strong the trend for crypto treasury companies is right now, folks. It's pretty incredible. We're seeing a lot, and we have more crypto treasury company news to talk about. So here's what it says in the article. Another heavy hitter from Wall Street is diving into the crypto treasury craze. On Wednesday, a group of investors announced that it plans to establish a $671 million company dedicated to stockpiling the cryptocurrency Avalanche. Obviously, they mean AVAX. Bart Smith, the former head of the crypto arm of the quantitative trading firm Susquehanna, will be the CEO. Huge news, folks. Huge news here. Here's some more news around crypto treasury. SWI, digital asset treasury company, plans to launch two stablecoins. This is interesting that they're planning to launch their own stablecoin. Let's go into the details. So, SWI Group Holdings, a NASDAQ listed based digital asset treasury, plans to launch two stablecoins on the Layer 1 blockchain, the information reported on Wednesday. Here's a quote. It is launching two stablecoins, SWI USDE, which will provide yield to holders, and USDI, which will not pay yield to holders, according to the report. It is partnering with stablecoin startup Athena to issue the two tokens, which will go live by the end of this year. This is really interesting. Stablecoin competition and wars are heating up here. I wrote a newsletter about this last year, right? We are going to see massive stablecoin innovation, especially as the Genius Act got passed. Well, it got passed, and everybody now and their grandma is trying to launch a stablecoin. We'll see which ones are successful, but the race is on and competition is good. It's healthy. Obviously, do your research. We'll see how this plays out with launching two stable coins. Obviously, there's a ability for these firms to earn, by holding the U.S. Treasuries backing the reserves of the stable coins. And the yield is nice that they have a stable coin dedicated to yield here. So stablecoin competition looks like it's about to heat up with several new US dollar peg tokens coming down the pike. Last month, SWI Group said its holdings of SWI tokens had surpassed $300 million after the company added approximately 20 million tokens. So all these crypto treasury companies buying is very bullish, folks. They're buying the tokens that you hold. I hold SWI, I hold AVAX, XRP, Bitcoin, Ethereum, Solana as well. So this is great, and it's going to help the value of those price of the tokens. You're going to have a supply shock, especially if they keep buying like this. So this is really great. Look at this. Let's talk Solana. Solana gets another treasury firm with $2 billion plan backed by DeFi protocol Marinade. So these companies, these publicly listed companies are branching out to different tokens clearly, and they're buying a lot, man. That's a lot. So NASDAQ listed VisionSys AI, if I'm saying that right, unveiled Wednesday a $2 billion treasury strategy focused on Solana, first aiming to acquire and stake $500 million in SOL within 6 months. The company, the day prior, appointed early Solana backer Jacob Sironian, if I'm saying that right, as chief strategy officer. VisionSys joins other public firms in holding crypto on their balance sheets, following a trend of using digital assets for yield earning strategies. So again, this is another bullish indicator, another indicator we're in a bull market. These firms are not buying to watch the value of these tokens collapse. They're trying to do the arbitrage here with the stock price. So again, I present to the bears, why would institutional investors and these folks be buying at the top? Right? They would want to buy before the top so they can get that ROI and the play on the stock price. Well, again, I present these questions. These are factual things that are happening, right? What do you have to say? You can't just show me something on a chart and say, hey, this one factor, but what about the other 10, 12 factors, right? Okay, jumping ahead, Injective debuts pre-IPO derivatives distancing from Robinhood private equity tokens. So many of you may have heard of the Injective protocol. I personally don't hold a token, but it's been getting some good adoption. So Injective, a layer 1 blockchain focused on decentralized finance, is launching on-chain pre-IPO perpetuals markets, giving global investors access to trade synthetic versions of major private companies such as OpenAI. This is a game changer, folks, because being able to tokenize, these private markets and private equity is going to be really awesome. And I think the SEC wants to open this up to regular investors, no longer the accreditation laws. And it's not just opening up to where you live or your jurisdiction, but globally. So this is why the race for tokenization is happening. These guys see the potential for money and liquidity to come in from all over the world. So the new offering allows users to take up to 5 times leverage positions on private company valuations directly through Injective, a move the protocol says distinguishes it from centralized pre-IPO products offered by platforms like Robinhood. They're trying to take a shot at Robinhood here. So, according to Injective's announcement on Wednesday, the pre-IPO perpetuals are powered by on-chain data sourced from CETA protocol. Never heard of that, which provides decentralized Oracle infrastructure to bring price data onto blockchains, and Caplite, which aggregates private market pricing data for venture-backed companies. Very innovative here by the folks at Injective. And once again, I don't hold a token, but this is the future, folks. Tokenization of stocks, tokenization of private equity, tokenization of gold, tokenization of real estate. Have been telling you all nonstop. I know you're going to hate me for saying this. The future of the markets, the economies, and governments will all run on blockchain rails. Book it. Remember, Tony's been saying this since 2023, 2024, right? And when you look back in 5 years, 2030, or even 10, remember what I've been telling you guys. Now, final news item here. Bank of England governor says stablecoins could reduce reliance on banks. Yeah, tell me something I don't know. A lot of people hate the banks. Right now, a lot of the banks are trying to change the stablecoin bill, the Genius Act. They're trying to lobby to undo the language. They don't like that you're earning higher yield from stablecoins on exchanges like Uphold or Coinbase, right? They don't like that because they want you to put your money in their checking and savings account and earn bullshit interest rates, right? 0.1%. Come on. This is BS. And you guys may have seen my interview with the blockchain CEO, Summer Mersinger, from earlier this week, where we talked about this. And she wrote an op-ed on CoinDesk talking about, hey, banks, what are you doing? You lost. You agreed to it. And now you have buyer's remorse and you're trying to change the law. Get the hell out of here. But they're getting disrupted. And this is, again, we continue to see that their cards are being revealed. They were the ones that were lobbying Elizabeth Warren and Gary Gensler to attack the crypto industry. They were getting disrupted, and we're starting to see, they were indeed the ones. So, of course, stablecoins are going to disrupt everything. If I can send you stablecoins, I don't have to go through a bank, guys. I mean, I think we see Coinbase and other crypto companies and apps are trying to make these super apps where you don't even need the bank, right? You can direct deposit into the app, change it to stable coins if you want, do what the hell you want, right? That's what's coming. So even the central bankers are recognizing that, and that's very bullish. So instead of these banks screwing us, like they have been for a long time, they take all the risks, they keep a lot of the money, then they crash the markets 2008, and then they use our money, the taxpayer dollars, to bail them out. Come on, we can't have that. So, but look, they're going to fight, they're going to lobby, but we're going to have to fight back. And I think the crypto industry is ready to do that. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Would love to hear what you guys think about the Bitcoin breakout and what's happening here. I hope you appreciate all the data points I shared with you all. No emotions, just facts, right? The data and signals, and multiple. We have to have a holistic 360 view of this market, not just one metric or two metrics. No, you got to look at the whole thing, right? So folks, if you appreciated the content, please be sure to sign up for my free email newsletter. It is 100% free. It's on Substack. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything about crypto. It's packed with tons of value, folks. It has videos, full text write-ups, downloadable materials, and the videos and the people who are teaching you crypto is not just me. It's from the CEOs, the founders, the people who are investing and building in the crypto asset class. No other course offers that. So check it out. Go to mycryptocourse.com. Folks, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.